Yes. So today I would want us to look at what we call financial markets and institutions, quite an important area, especially when it comes to your theories. I told you in our yesterday's class that if you don't appreciate the theories very well, then you can never, in this case here, ace through this paper. This paper is quite an interesting paper. You need to, first of all, appreciate most of the theories are normally tested. Once you are able to get like 20 out of 30% of the theory papers, then you shall be good to go. You shall be good to go. So today I would want us to look at financial markets. So when we talk of a financial market, this is just like any normal market, like where we have foodstuffs being sold. So basically any market will bring in the supplier of these goods, and then of course it brings the consumers of these goods, the buyers. It puts them together, it gives them a platform to exchange. I need money, I need, in this case here, bananas. So in this case here, we are saying that buyers and of course providers of these goods are being put together through a platform called who? A market. The same case with financial services. We have people outside there, ladies and gentlemen, who have got lots of cash, lots of cash. So these people have surplus cash. Instead of having this cash lying idle in their banks, they would rather, in this case here, take this money to people who are deficit in terms of capital. People have got very good ideas, but they don't know how to finance. So we have the financial markets giving them a platform, that is the lenders and the borrowers, right? Ladies and gentlemen, these financial markets will also give us an opportunity to minimize, to optimize on our risks. So we have financial markets purely, which are for risk management. We call them derivatives financial markets. We call them derivatives financial markets. We call them derivatives financial what here? Markets. I'm so sure you guys are reading newspapers, especially the Business Daily. You must have heard about Kenya Airways fuel derivative. Is there anybody who has ever heard of a fuel derivative? A fuel derivative, in this case, which was acquired by Kenya Airways some time back. Listen, how does this work? You see, as a risk management tool. What will happen, like now we were realizing that price of unga was really getting very high, skyrocketing, very high, very high. So if that is the case, and you happen, for example, to be a big hotel, which uses unga quite often, you need bulk of unga. Then what do? You can, in this case here, ladies and gentlemen, target, for example, some miller. You tell this miller in advance, I need like 1 million packets of unga for the next 2 years. And I don't want to be in a situation where when I'm sleeping, I'm really worried. So I would want us to enter into what we call a financial contract. A financial contract where we agree that for these 2 million packets of unga that I need, I'll be procuring each one of them at what year? At 200 shillings, in this case here, per packet, for example. Per packet, assuming that the 100 Kenya shilling price has not come into effect. So we have agreed. So it's a contract. So then what would this mean? That in the future, even if not a bag, but a packet of unga was to have the price, of course, increasing even to 300, I'm covered, in this case here, as a purchaser. I know that the price in this case here can never exceed 200. We have a contract. So in this case here, we are trying to mitigate against what are risks. And what has been able to help us to mitigate, to manage our risks, and gentlemen, is the fact that we have a financial market of derivatives. So they talk of the word derivatives. Always remember that this is a risk management financial instrument that trades at a derivatives market, which is a very important market, which is a very important financial market. Financial market. Listen and listen to me very well. These are 5 minutes topic, ladies and gentlemen. When we talk of financial markets, we are saying that a financial market allows people to easily buy and sell financial securities, such as stocks and bonds, commodities such as precious metals. A financial market allows people to easily buy and sell financial securities, such as shares or stocks, bonds, derivatives, even precious metals like gold. Then we have got what we call the general markets. General markets are all those financial markets with many commodities like our NSE here is a general market. We have shares of all types of companies. We have bonds of all types of companies there, trading there. And then we have very highly specialized markets where we sell just one commodity, like the derivatives market are a very specialized market. Markets work by placing interested buyers and sellers in one place, thus making it easier for them to find each other. So financial markets facilitate the raising of capital in the capital markets, the transfer of risk in the derivatives market, international trade in the currency markets, and then of course in banks, where we shall be having a match of those who want capital to those who have it. And then we have got something very important for you guys to master here, what we call Euro markets. This is an overall term for international capital markets dealing in offshore currency deposits held in banks outside their country of origin. Euro does not mean Europe in this case. Euro means external in this context, outside. So for example, euro dollars are dollars held by banks outside the United States of America. It allows large companies with excellent credit ratings to raise finance in a foreign currency. This market is organized by international commercial banks. Listen and listen to me very well. They have given us a very good example there, the euro dollar. And they have told us that euro dollars are basically all those dollars that are held by banks that are outside of the US. So like our Central Bank of Kenya here, we have so much in terms of reserves which are denominated in dollars. So the dollars that we have here in Central Bank, they'll be called the euro dollars outside of America. Right? So if we have got Kenya shillings outside of Kenya, we shall call them the Euro Kenya shillings. And of course, we have got so much outside there, of course, to enable international trade. We need Kenya shillings outside there. So when you hear of, for example, a euro yen, very important here, a euro yen. Basically, these will be the yens, the Japanese yens, which are held by banks outside of Japan. It's very important for these banks, ladies and gentlemen, to have a multiple of currencies. If you go to Equity Bank just across the road here, you will get Equity Bank having Uganda shillings. You will get Equity Bank having dollars. And of course, I finished this by reading these again, ladies and gentlemen. We are told something very important here. For your exam. Euro markets. This is an overall term for international capital markets dealing in offshore currency deposits held in banks outside their country of origin. Euro means external in this context. For example, euro dollars are dollars held by banks outside the United States. It allows large companies with excellent credit ratings to raise finance in a foreign currency. This market is organized by international commercial banks. Now, ladies and gentlemen, remember, like in Kenya here, we are getting ourselves in dire problems. We are getting ourselves in this case here in a situation where we do not have like the dollars in Kenya. The dollars are becoming quite scarce. Why? Remember, because of because like now we got euro bonds. We borrowed money to come and put the SGR. We borrowed money in this case here for the express highway. At the end of the day, the guys who gave us this money knew that we are not a very organized country, right? Most African countries are not so organized. So they went ahead and put in covenants, restrictions, and said, fine, we are giving you this money in the form of US dollars. Also yourselves, when you shall be returning this money to us, and ensure that you are paying us in terms of In terms of dollars. So like now when it comes to this particular time when the government is making installment payment to, for example, China, to, for example, in this case here, Germany or whoever, because they have that restriction that we are paying them in dollars, I mean, we find ourselves in a situation where we don't have what here, where we don't have dollars. So then when we don't have dollars in the market, what these big companies do, because when there are not enough dollars, like you saw the other day, some companies are already actually closing down because of scarcity of dollars in Kenya. Some of you must have seen companies like copper oil that are buying sunflower, the ingredients for making oil. Most of them have said it is either we close down or our consumers here in Kenya, people want our oil. Cooking oil, they should also pay us in terms of what? In terms of dollars. Like the other day, I went to Panari Hotel just across here along Mombasa Road. And then I realized that they have now strictly asked anybody who goes to eat whatever type of food they ought to drink, even if it's a cup of tea. When you go to Panari Hotel, they have now strictly made it mandatory for everybody to pay them in form of what? Dollars. So the bill comes in form of dollars. And they tell you from the word go. When you come, you will be able to see a board there. If you don't have dollars or if you don't want to exchange dollars at our bureau there, please, whatever you will eat here will be invoiced in form of what? Dollars. So the Kenya shilling is becoming what? Useless. People are trying to run away from it. And I went ahead, because I'm a finance expert, I went ahead in this case here to ask Panari Hotel, you guys, I mean, you're operating in Kenya. We have given you quite a good opportunity to even do business in Kenya, right? Why don't you want our currency? They told me something very easy. They're top chefs who are highly paid. They only accept dollars. They have a loan which is denominated in the form of dollars, which at the end of the day has to be paid back in dollars. So the question is, why should we invoice our customers in this useless Kenya shilling currency, which at the end of the day we'll have to convert at a loss to dollars? So we'd rather in this case here match our receipts with our expenses by having everything being dollar denominated. So the concept is we also need a situation, ladies and gentlemen, where we create an opportunity for euro markets, where basically we shall be able to have euro dollars. It's RCM Online College, which in this case happens to be a college in Kenya here. So we need euro dollars in our bank accounts. Even yourselves, as we move along, it will be very important for you to start opening dollar accounts. Is there anybody in this particular classroom who has a dollar account, bank account, dollar bank account? Anybody? Anybody who has a dollar bank account? Anybody who has a dollar bank account? Is there anybody who has a dollar bank account? Please be very honest with me. Tell me very fast. Is there anybody, please, there in the, you can type there. I can see Koros raising up his hand. Very good. Yes. It's one of the ways, best ways that you can use to preserve your wealth, So you keep on buying this dollar slowly. And for example, if you're working for an international organization like myself, I work for an international organization. What do? You request your company to pay you in the form of what? Dollars. It goes to your dollar account, right? When this money comes, like right now, the Kenya shilling is quite useless. So if you're getting, in this case here, money in form of dollars, then you become more wealthier as you progress. So we continue here. So I hope you guys have been able to pick the euro dollar concept very well. I like giving practical examples as I teach because I'm a consultant, financial management consultant, right? So key features, why would you want people to go for euro markets? Why is even the government itself going for euro dollars, for example? Right? It's because of the size. It's much bigger than the market for domestic bonds. Domestic bonds, I even got worried when Rigathi Gachagua was saying that he'll be able to issue domestic bonds and borrow 500 billion. I'm waiting to see that. If they take office, 500 billion local here, a municipal bond or a national bond, it will be quite crazy. You'll mop all the liquidity that we have in the market. You'll squeeze the SMEs. They'll not get where to borrow from. And remember, right now, the interest rate of 14% has been capped up there, or no, it has been removed. That cap has been removed. So the moment SMEs, of course, will not be able to get liquidity in the market, the banks, of course, will have to take that thing to about 30%. That will be a very bad policy. Great. So that doesn't apply. That is why we wanted the government to get outside there to go and borrow, because outside there you can borrow whatever amount from IMF, from World Bank, right? Those markets outside there are bigger. So they're much bigger than the market for domestic bonds. Cheap debt finance can be sold by investors, and a wide pool of investors share the risk. Like now, ladies and gentlemen, when the government is borrowing using the euro bonds, look at the interest rate. It's 4%, 5%. It rarely goes beyond 6%. But if the government borrows locally here, right, when they borrow locally from our banks, like now the other day, Kenya government had borrowed about 650 million Kenya shillings for Kenya Airways through what we call a syndicate of banks. Many banks come together to reduce their risks. They give Kenya Airways 650 million Kenya shillings, right? Look at the interest rate. The interest rate was 17% from these local banks. It's very expensive. When you go outside there, the rate in this case will be smaller, so long as you've got a collateral to pay them. And the collateral, of course, for the government, if it's the airport, you mortgage them. You tell China, take even the title deeds of the airport, etc., like that. So long as you've got collateral, picking loan outside there, cheaper loans outside there, a big possibility. And then we have cheap finance. Of course, you have mentioned this. Unsecured, yes, in some cases, ladies and gentlemen, in some cases, you will get these particular water loans through the word of mouth or just writing, where the government gives a guarantee, just like that. So outside there, you can get something that is quite water unsecured, yes. Great. Then we have long-term debts, yes, like now you'll be given like a 15 years, like the express highway. Express highway is like not a 15, but a 30-year debt. 30-year debt. So this guy will come, 30-year debt, which is at a concession. He works on this, the road is still his for 30 years. It's a long term. Who will give you a 30-year loan in Kenya here? Not even Standard Chartered Bank. They can't give you 30 years loan, right? Less regulation. By using euro markets, banks and financials are able to avoid certain regulatory aspects, such as reserve requirements and other rules. Ladies and gentlemen, remember, we can just go straight away to stock and bond markets. A stock market is also known as a stock exchange. It has two main functions: to provide companies with a way of issuing shares to people who want to invest in the company, and then number two, to provide a venue for the buying and the selling of what here shares. So we're saying something very important, ladies and gentlemen, that stock markets, basically, we've got what we call the primary stock market, the primary stock market. So primary stock market is where we have the initial public offering. When you hear of initial public offering, like the one that we had Safaricom used to be in government. It used to be a government company. And then in this case here, the government was able to spin it to the public. So they took it to the public. The public bought shares, so initial public offering. I remember those shares were going for what here? For 5 shillings. So under the initial public offering, the companies, of course, will go to the stock exchange, Nairobi Stock Exchange, and they'll be able to, so it is the company which is dealing with who? With shareholders. So the company is able to raise capital from shareholders directly. But some of these shareholders are not long-term shareholders. They are shareholders who cannot stay having shares of a company, say, for 5 years. They would want, in this case here, to sell, ladies and gentlemen, shares here. Remember, it's prohibited in the Companies Act. You can't say, now I'm tired with your shares, that you guys go and just buy back my shares, give me back my money. It's not allowed. It's not allowed. So in this case here again, we have this stock exchange giving what we call a secondary market. So secondary market, if we have shareholder A and then we have shareholder B, right? So shareholder A is tired. He's looking at selling their shares of this company. What do? They get a new person to sell to. So there was a primary sale from company to shareholder A. And shareholder A wants to sell second time. So we have now a secondary market where they will be able to dispose shares between themselves. So when we talk about a stock market, ladies and gentlemen, it will be imperative for us to appreciate that a stock market provides companies with a way of issuing shares to people who want to invest in the company. And then number two, provides a venue for the buying and selling of what here? Shares. And now we have what we call money markets. When we talk of money markets, I love these money markets, ladies and gentlemen, because I know how they operate. I've seen how these operate practically, money markets. So money markets are basically markets for short-term funds. Markets for short-term what here? Short-term funds. And of course, highly liquid securities like treasury bills, right? Money markets for short-term funds. I'm so sure here all of us must have heard of what we call overnight lending. So overnight lending. So under overnight lending, if you must know this, under overnight lending, ladies and gentlemen, the most important thing that you're supposed to know under overnight lending is this. You get somebody, goes to the bank. So this bank, if it has got excess cash in the bank in the evening, they're supposed to surrender that money to the Central Bank of Kenya. They're supposed to transport this money to the Central Bank of Kenya. You're not allowed. Your insurance will not allow you to stay with billions and billions of Kenya shillings in the bank. You're supposed to surrender that money to where? To the Central Bank of Kenya. Call G4S, transport that money to Central Bank of Kenya. So instead of making those transfers here and there, banks are allowed to lend these monies here to people overnight. Right? You can imagine somebody comes and borrows, say, like 30 million over the night. And then in the morning, they return the entire money back. Your money plus interest. And of course, they have gotten what here? Some profit out of this transaction. So I keep on wondering, maybe you guys can talk to me this afternoon and tell me, what kind of business do these people do with this money? What kind of business? Just one night and they have made their profit. And they return the money. What kind of, or even if it's 2 weeks, what kind of business? You guys help me because I would also want to become very rich. What kind of business do they do? What kind of business do they do? I can see good names here. I can see Laura. I can see Jungle, Johnson Nyok. I know Johnson Nyok. Please try typing there. What kind of business do they do, these guys? Forex trading, I've heard of that, yes. Just liquidity, how? You're given liquidity, how? Yeah, we have given you the money, but I would want to know, what kind of business do you think do these very clever investors do overnight? 20 million overnight, they return the following morning, and it never goes wrong. They return the 20 million in the morning, plus interest, plus, of course, they must have gotten their cut. Cryptocurrency, thank you so much. So, ladies and gentlemen, great. So, when we talk of money market, what do we mean here? The money market is the global financial market for short-term borrowing and lending. The money market is where short-term obligations are bought and sold, such as treasury bills. We have commercial papers, and the bank has what here? Acceptances. The most important here is the TB, commercial paper, and even money itself. Then we have this capital market. A capital market includes the stock market, commodities exchanges, and the bond market, amongst others. The capital market is an ideal environment for the creation of strategies that can result in raising long-term funds for bond issues or even mortgages. Along with stock exchanges, support organizations such as brokerage firms also form part of the capital market. These outward expressions of the capital market make it possible to keep the process ethical and more easily governed according to local laws and customs. Ladies and gentlemen, your examiner, you must have seen from your past paper, if he gives you 2 marks and asks you to define capital markets, these are those markets, ladies and gentlemen, which companies use to get their capital. They borrow from, right? They use to raise their capital, not just any other capital, but capital which is long-term in nature. Capital which is long-term in nature, like when you issue your primary, when you issue your ordinary shares in the capital market, that's a long-term source of funds, actually a forever source of funds like that. So that marks the end of this particular small theory that I wanted to introduce to you. Very important.